discussion for the day. And today we're talking about something that touches every business, whether big or small, across the country. And we're talking about the Cedi. Now, the Bank of Ghana recently made a very bold move, injecting about $10 billion into the economy to stabilize the currency, curb volatility, and also restore confidence. But what does this mean for your business? Will this actually bring real opportunities for growth, or are there some risks that are lurking beneath the surface? And how should importers, exporters, and investors rethink their strategies in this new environment? And most importantly, how can businesses use this moment to prepare for the next wave of uncertainty or certainty? Well, and that's exactly what we are trying to explore this morning right here on the show. And I am joined in studio by somebody that I think I like so much. He's very good, and he's been very, he's very, very knowledgeable. Last week he gave me a very good show, and I hope that he does today as well. His name is John. His name is John Kyei. He is a financial analyst, and he joins me this morning for this conversation. We're going to look at the opportunities, the risks, and also the smart moves businesses can make now. John, welcome back to the Business Breakfast on Z.
Thank you so much. I appreciate the opportunity.
All right. Thank you very much for also making time to join us. So this morning we're talking about the $10 billion injection by the Bank of Ghana. First of all, I've seen quite a number of people criticize it, but some people actually support. Where do you stand?
Okay, personally, I support the move. And the reason is that, if you look at, the history, you realize that most often we don't get enough, exports proceeds to finance our imports. And normally these things lead to a lot of speculation. And before Good Board came into scene, the forest bureaus were managing our currencies, and they try to hoard and do a whole lot of things. But we are seeing Bank of Ghana in this moment actively playing a key role, making sure that anytime importers need money, those monies are available. And you realize that they even announced it before, they engage in the intervention.
Did they announce it?
Yes. So most of what they do, I think even for genuine intervention, they have announced it already.
Okay.
Just to put away any kind of speculation. Because most often, exchange rate is largely driven by speculation. So once you announce it and people know there's going to be enough money for us for our imports, there's no rush for dollars. And that will stabilize our currency. So it's a good move. As far as we are getting a lot of reserves, we are not seeing the reserves depleting. We are adding more. We are, adding more to our gold reserves. Definitely, what is the purpose of, central bank? To make sure prices stabilize. That's one key function of them. And for exchange rate to also stabilize. So if there's no, huge cost to do this intervention, then personally I support this move.
But why do you think people criticize it? Because I've seen quite a number of people, some known economists actually making it feel like, government is just injecting money into the forex market and all of that.
Okay, so the issue is that most often, central bank intervention is seen as artificial engineering of the currency. And most people feel like it will not be sustainable over the long term. You can't do this, all the time, especially assuming maybe good price crash now, the economy is in trouble and we are not going to get enough money from our reserves. Then what happens? So they are scared that if you continue to engage in this, they get to a point where if you don't have enough to pump into the economy, then the economy will expose. So it's a good fears to have.
Okay.
Do you get? But personally, I believe that as they are doing this intervention, I'm sure they're also looking at the long term. I listened to the governor recently, and he mentioned that this is just a way to make the market calm, but they are thinking about permanency of some of these interventions. And I believe once, as far as exchange rate is concerned, it's about trade. So once we are doing this, at least to support the current trade system, we need to look at the long term where we increase our exports, find a way to reduce our imports, and things will be better for us. Yes.
Is it that easy?
It's not that easy because, we see one thing about, economy is that businesses also rely on imports for survival. So once we are trying to, substitute exports for imports, there will be a lot of fight back. But the issue is that we should look at the long term. I'm sure, there's a way to engage these importers to understand that it's not always about imports. You can also do things here. Then you bring them in. And then once they realize that the Cedi is not too fluctuating and I mean there's no benefit of doing a lot of imports, they will also shift and then maybe find a way to also go into exports.
But that's a long-term thing.
Yes.
All right. Anyway, so $10 billion US dollars. How significant is that in stabilizing our currency?
Yes, it is very significant because if you look at our whole GDP, it's around $83 billion, which means that the 10 billion we are pumping in 1 year is just about 12% of our GDP. So it's huge. But the issue is that, you know, most often you realize that, I mean, the money we get from exports normally delays. And as a result, when the importers need foreign currencies, they struggle a bit. And that has led to a lot of fluctuation in our currency. Now that, I mean, central bank is in to support, I mean, these foreign exchange transactions, I'm sure, even though it's significant enough, because 12% is huge, okay, but we are not seeing, as far as we are not seeing depletion of our international reserves, and we are even actually seeing increments. I mean, December, and then they announced that we have reached a milestone we have not gotten there before, and we have a lot of gold reserves now. So I don't think there's a lot of, I mean, issues to worry about. It is more about looking at, I mean, just intervention will not, I mean, support it over a long period of time. We just need to also find a way to diversify so that at the end of the day, the exports can cushion our imports.
But how does this compare to previous interventions, if any?
Right. So, I mean, previous years too, you have seen a lot of government intervention. But I think what I'm seeing here is that there's a lot of confidence in the economy. Okay, you could see, and you will see that, I mean, we are doing things right, especially when it comes to expenditure management, when it comes to a whole lot of things. So it's not just about the intervention that is driving the exchange rate, because we have done it before and still the Cedi was depreciating. Now, if you look at even a lot of projections by the international organization, they were projecting that the Cedi will actually depreciate by the time the year ends to 15 cedis and so. But we have been able to beat that, where we have achieve about 50% appreciation of the Cedi. So clearly, it's not just about the intervention that is making this happen. Yesterday, the finance minister also announced that they are paying some energy sector debt. So all these things are moving a lot of confidence. And once you are having that confidence in the economy, the international investors will not be in a hurry to sell their instruments once the year comes to an end. They see things moving well. And now you could see that there's no motivation of, disposing of your investment because the Cedi has strengthened. So why will you do that? You even want to. So I feel like investors are also waiting, and all that is culminating into what we're experiencing now. So it's not just the usual, way that we just intervene and at the end things come back. I'm seeing very active and a lot of collaboration between Bank of Ghana, Finance Ministry, and you see the fiscal side supporting the monetary side. So it's making the monetary policy works effectively. If maybe all these things were happening and we are seeing a lot of payments, unnecessary payments going on, can you still have the shocks that we experienced previous years? But I feel we are doing something right and we are moving the right way.
You know, when I hear some economists talk about the fact that they currently see the fiscal side supporting the monetary side and vice versa and all of that, I begin to ask myself, wasn't that what was happening previously?
So you see, normally you see the fiscal side is more about taxation, expenditure management, borrowings and the rest. So once you see the fiscal side doing the right things, not paying unnecessary bills. In fact, contracts the contract they are signing are not just, things of paying things that will not bring anything into the economy. You see, it allows the monetary side to work on whatever they need to also do to make the economy work. So, for example, you realize that, all the interventions that they are doing, we are not seeing them using that to maybe sign new foreign contracts, pay debt and a whole lot of things. The intervention is basically giving money to maybe the importers, not really to government to be paying his bills and the rest, but giving to the market to, stabilize the Cedi. So in that case, you are not going to see those things that happened in the past. So basically, that is what is happening now.
All right. Now, there are a section of people who think that this particular move, this $10 billion US move, doesn't reflect a lasting. I mean, some people actually think it reflects a lasting strategy for currency stability, but some other people also think it's just something temporary. I mean, some short-term psychological boost for businesses and investors. Where do you stand in that?
All right. So you see, most often central bank intervention is not really the solution, because when it comes to foreign exchange issues, it's more about trade. If we're not trading with any other country, I don't think our city will be moving the way it is moving. Now, what we are doing is that we are actually just giving money to importers and all those who transact in foreign, so that like there will not be any bad speculation and a whole lot of. So that's what we are doing currently. But the issue that we are not, even though we are generating foreign reserves from the gold board, I mean transactions, giving us a lot of dollars. The issue is, what if something happened? You know, exactly. I don't think gold will always be there. We have, if someone will go to history and say, "Oh, go Ghana," we will always get the gold, so there's no need to worry. And also, even gold price can crash.
That's true.
So when those things happen, you realize that these interventions will not work anymore. So that's why I'm saying that we must see this as a temporary measure, whilst looking at the permanent solutions to our trade flows.
Okay.
So, for example, whatever. I mean, we import a lot, and as a result, the import bill is too much over export. We find a way to substitute those ones, and then also, I mean, increase our exports. So that in the long run, there's no need for central bank intervention,
right?
Because the whole market is reading the whole situation as central bank playing key role in managing the currency, and that's what IMF has even warned, and a whole lot of institutions have warned against. Do you get so? We shouldn't see this as we can do this all the time. So let's relax. We always pump money into the economy. I mean, dollars into the economy to stabilize the city. We need to look at trade flows and find a way of increasing exports and reducing imports. So that will bring, I mean, long-lasting impact on the city stability.
Right. But are there risks that businesses may misinterpret this temporary calm as a permanent stability?
Yes. So you could see that. There's also an aspect where Gold Board is promoting that as far as they exist, we are going to get enough. And normally we see them publishing information to suggest that we don't need to worry. But you see, in terms of general economy, anything can happen.
Right.
Especially if there's crisis, what happens? There could be times that maybe even you exporting gold may not be possible. Or maybe the price has dropped to a situation where it's not profitable again. You are not going to continue doing that. Right. So we can't rely always. I mean, if we will be able to, I mean, do the gold board issue to translate into, I mean, adding value instead of just exporting the gold and just getting foreign reserve. But actually, I mean, do industries, I mean, bring industries that will process the gold for us to get more earnings from that. Then maybe that can bring stability. But the central bank intervention cannot be the permanent solution to our city stability problems. Do you get it? So we need to look at, I mean, the long term, fix our trade balance, and I'm sure that will help us in the long run.
Right. Okay. But if I get you well, so it means that this is not sustainable.
Yes. It's over the long period of time. Yes.
Right. So what are the things that our leaders, I mean, business leaders, you know, because our platform is actually directed to the business community. So what are the signs that they should look at to actually gauge whether this is stable or not? Okay.
So in terms of, I mean, businesses, you know, what they need to do is that even though every communication coming out of government is showing that this can be sustained, but they have to look at it from, I mean, how they also struggle to even get the dollars. Even though, you know, I think recently we had a conversation with a bank and they were complaining a little bit about too much intervention from the Bank of Ghana. So what it means is that, I mean, you don't have to just look at the thing and feel like there's stability, so there's nothing to do. So you're just going to relax and wait for crisis to happen. You need to plan ahead. You need to know that as far as Ghana is concerned, history does not suggest that some of these things can be everlasting. So even now, you start planning. Give all the scenarios, the worst case scenarios, the normal scenarios, and the best scenarios, and see how you can manage your cash flows. So that no matter how the city will travel, you are questioning against. This is the point where maybe we need to even look at hedging strategies. In Ghana here, we don't do a lot of hedging. You know, we just move. Whatever happens, we face it. You can decide to do hedging. I mean, not get a lot of dollars now, but now, I mean, there's communication coming from the presidency and a whole lot of to say that the city will be stabilized at 10. It's now 10.
Yeah.
So whatever, you can look at a 1 year plan and see how you can cushion yourself, get the billions somewhere, so that when anything happens, you are safe.
You are safe.
So personally, I feel like, don't feel like, oh, the city is going to be like this forever. No, it's not going to happen. By all means, there'll be fluctuations. So once the fluctuation is good for you now, take advantage of it. Find a way. If you have to even save in foreign currency, you have to do that. I mean, you can have a monthly savings. So for me, maybe every month I will save $100,000, so that, I mean, whatever happens, you can get that benefit to offset any risks that will happen in the future.
Right. So if you're saying that there's going to be fluctuations, I mean, everybody should anticipate that anyway. Yeah. How quickly could the situation, change?
Okay.
You know, should any global or domestic shocks occur?
So, most often there are some cyclical seasons where there's heavy demand for dollars, especially from multinational companies. Yeah. The year has ended. Some of the companies need to repatriate profit to their parent companies. So you realize that mostly around March, April, you see a lot of demand, for dollars by these multinational companies. And most often their demands are huge. So in those situations, the cedi can fluctuate a bit. Just that, central bank says we have enough reserves. So even if it happens, you intervene. But it doesn't mean that you should sit there. So mostly March, April, you see the cedi moving a lot because multinational need to repatriate profit to their parent company. And these Talu Oil and those people, huge sums of dollars they will need during that time.
Right.
So around March, April, anything can happen. If we see stability, that's good. But anything can happen where we need to prepare for that as far as businesses are concerned. That's why I was suggesting that now that the cedi is at a lower rate, find a way of saving into a dollar account. Not too much, but you can look at your demands for the next 6 months and find a way to save towards that, so that whatever happens, it will be to your advantage.
Right, but won't the Bank of Ghana come for your head asking people to save in dollars?
No. So that's what I'm trying to say, that you are using that as a hedging strategy. Okay. So it's not like, mostly is the high demand for that normally translates into fluctuations. So you can plan where you are doing that in a bit, not putting a lot of pressure. Because if you also put a lot of pressure, the cedi will start depreciating, and in fact, whatever we are discussing, you will not benefit from it. Do you get it? But you don't. If we were in a country where maybe they have these derivatives, where people can trade in, where you can do 3 months forward, 6 months forward, and all those things. Bank of Ghana was doing that in the past. I think recently they are not really doing that. Okay, so if you had that, businesses can do that. But once you don't have those options, the only thing we can do is to find a way to save. Some money, so that when those situations happen, we have that money to cater for our risk.
Right. Yes. Okay. Anyway, let me just announce the phone lines in case anybody is listening to us and they want to make a comment or join the conversation. If you want to join the conversation, you are free to do so. This morning we're talking about stabilizing the cedi, the opportunities and the risks for businesses after the Bank of Ghana's $10 billion move or injection into the forex market. And it's a very important conversation for the business community, because you need some of these things to be able to plan and prepare ahead. And that's why we're having this conversation this morning. Feel free to send your questions, your comments, or your suggestions to 0544321019, 0544321019, and I'll read them for you. And also, you can call us on 03039566641, 03039566641, and we give you the opportunity to share your thoughts with us this morning. We're streaming live on Facebook at ZFMGH and also on YouTube at Z Multimedia. Please drop a comment and we'll read them for you as well. My guest is John Kyei. He's a financial analyst. He's been looking at the numbers. He's been looking exactly what is going on in terms of monetary and also the fiscal side of things. And he's giving us a lot of insights into what you can do as a business. But this time we're going to focus more on the business impacts, really. And he's going to share his thoughts on that as well. John, let's continue the conversation. So what immediate changes should businesses expect maybe in pricing and imports and cost planning under a more stable city?
All right. So I think for importers, I think what is happening is good for them. I mean, now if you need dollars, you don't need to exchange a lot of cedis for dollars. So for importers, I think they are very happy what is happening, right? And for them to, because the city is never going to be the same, they have to find a way to, pushing themselves against any risks, especially when the rate is very low at this point. Now, for exporters, the issue with exporters is that they are really suffering from what is happening, because as far as your city has appreciated by 50% over just 1 year, it will make your, products more expensive as far as the international trade is concerned. Okay, if you look at even cocoa board, for example, you realize that they are really struggling because, they have promised a particular price, and one, the cocoa price has fallen, and two, Cedi is also rising. So definitely they are really experiencing the heat. And there are some exporters that they normally get loans to do their business. So if they are getting lower rates when they export, it's really going to affect them. So exporters are really struggling with what is happening. Exporters become happy when the city is rather depreciating. But we are seeing the other way around. But because Ghana normally we are import dependent, it's good for us generally. That's why we are seeing even inflation going down and things are really working. There are some countries like Japan, they're experiencing huge depreciation of their currency. Yes, if their currency has fallen over 50%. But they are happy because they are export-driven companies, so it's even benefiting them, especially with Donald Trump, tariffs and all that. They are, even China, intentionally even devalue their currency. So for them, they enjoy depreciation because they can export more. Do you get it? And because they can export in large quantities, they are happy with what is happening. But us, because it's the other way around, maybe you don't really, focus more on exports. We are not really feeling the heat. Are you getting it? But three exporters need to be calm. Maybe they need more new strategy to enhance their export, especially when our exports have become very expensive in the international arena. So maybe they have to also find a way to diversify into other markets. That is not about dollars, because clearly it's the dollar that we are more focused on. But if you do China and other countries, still they can make gains from what is happening. If you look at even the oil and gas sector, me too. In terms of pricing, you realize that fuel has now reduced to about 10 cedis. Some of the fuel stations are selling for 10 cedis, 50 because of the stability. So it's helping, certain businesses. Exporters are the only ones, suffering from what is happening.
And I think that's why the president, even from the beginning, had to tell them, talk about when the city was
because they felt it will even go below 10 and that will even keep them out of business. So he has to give them assurance that it will never go 10. So we just become.
And it's actually been there.
Exactly. It has been there for the whole year. So, for businesses, you see, city stabilization, as far as citizens are concerned, we are happy because at least it reduce our the price of goods and services, cost of living will go down. But they also benefit because they're also citizens, so their cost of living to go down. So everyone benefits. In fact, when the whole economy is performing well, everyone benefits, whether you are exporter or importer. So we are all happy. I'm sure the exporters even are happy with the current situation, even though they are not getting much from their exports.
But the only time it gets to affect them is when they get into their business side of things.
Exactly.
Right.
So when exporters. They get for exporters. Exactly.
Okay. So maybe are there some particular sectors or product types that stand to gain the most? From this predictability.
Yes. So you see, in business settings, predictability is the most important aspect because it helps you plan, it helps you manage your cash flows very well and all that. So you see, even exporters, for example, if we know Cedi is going to stabilize at 10 cedis for the next 10 months, you can plan and know how to diversify your exports to different countries.
Right.
So basically, in fact, every industry, every sector tends to benefit when the Cedi stabilize like this, because then there will be no I mean, there will be less fluctuations in a lot of things, and you can predict demand. You can predict all those kind of stuff. Right. So what it means is that it makes you more comfortable in the decisions that you make. And I think I'm seeing Bank of Ghana also working, I mean, seriously to reduce interest rate. Once that goes down and the cost of credit also becomes, I mean, cheaper, everybody can now even borrow money to do business. And once they can, I mean, predict what happens in the next 6 months, 7 months, they can go into, I mean, profitable businesses that they feel things are stabilized now. Yeah. So, I mean, we can gain much from that sector. So, personally, I feel every sector benefits from what is happening, especially when, I mean, the whole economy is in this stability mode.
I see, but will the currency stabilization, of course, I think we've seen it actually affect our inflationary
Yes.
I mean, pressure. We've seen it ease
coming
a bit.
down.
Yes. Or are there some deeper structural challenges that businesses still need to navigate?
So you see, one thing I've realized is that if you look at all the numbers, most of them are being engineered to achieve a particular objective.
Right.
So, for example, you realize that when interest rates coming down was an active decision by the finance minister to bring it down. So there are a lot of things that have been artificially engineered to achieve a particular macroeconomic objective.
Okay.
So now what happens is that we now need to work on the structural side, because there have not been serious changes in the structural side. When it comes to our exports dynamics, when it comes to our imports dynamics, we have not changed much about it. Do you get it? So, but you see, the country has gone through a hell of, I mean, economic problems. So there was a need for this stability, and there was a need for this confidence. But once we have achieved this confidence, we have achieved this stability, the next thing is to now change our structure. I mean, the whole structure of the economy, where it's not working. And personally, I feel like, if possible, central bank must take active role in supporting certain sectors of the economy that can engineer growth.
Like which
so,
sectors?
For example, you can decide to engage banks to give maybe loans at a very affordable rate for certain sectors, and maybe tourism, like the CSOs, the SOEs that are performing well, like the Ghana Publishing Company. You help them expand. Companies like Tor, you help them expand. Companies like VRA, Electricity Company of Ghana, places that can bring a lot of gains, I mean, in terms of profit. You come in, support them with working capital to engineer growth in those sectors. Once we engineer growth in those sectors, and we are seeing VRA now announcing profit, we are seeing Electricity Company of Ghana announcing profit, Ghana Water Company announcing profit, you realize that now they can also expand, and then tourism sectors to doing well. Then the whole growth now, change from your active intervention to the real economic growth. And that is where we will see that we have arrived. But for now, we have not really arrived. We are just trying to bring the confidence back. The confidence is needed, because that's what will bring the investors into the country. Once they see things are working, they'll bring their money. And those monies can now be invested in hot sectors that can grow the economy. So basically, that's my view.
Okay, we'll talk about investments very soon. But is it time? Is it time for us to begin to focus on the structural issues? And I'm asking that because I want to know whether we are stable enough.
Okay.
Or there's still some more things we have to do about stability before we move.
I think it's a very good question.
Thank you.
Very good question. Okay, so if you look at what is happening now, it's just 1 year this government came into office. Maybe we should give it the next 6 months. Because you see, most often when you come anew, I mean, when MPP government came in 2017, we also saw stability within the 1 year.
The first year.
But after the first and second year, then things begin to change. We need to look at how the government is going to go about their things for the next 6 months, especially when it comes to expenditure, whether they are still going to actively pursue that aggressive expenditure management, whether they are going to, settle all debts, arrears and all that, whether Bank of Ghana can continually do their intervention, especially when we know that this year we learned Gold Board is now going to be full in charge of exports and the rest. We want to see whether because it means that now Bank of Ghana is not really going to get the whole foreign exchange again. Like they are used to, because Gold Board now has to account for the whole transaction. Do you get it? So we just need to look for the next 6 months. If the next 6 months we are still seeing the government pursuing its policies. Still, I mean, in terms of fiscal prudence, we are seeing that we are seeing not too much extravagant expenditure. Last year, they even cancelled. I mean, we did the independence celebration, but it was very moderate. If you continue that path, then it will give, I mean, clear signs that things will continue that way. And once we will see that situation, then it seems that we will also wait to see what happens the second year. But you know, the real challenge will be when they need a successor to continue, whether they will move away from what they are doing now. Because most often, when it gets to that point, they forget about these things and try to, I mean, make people happy. And then that's where the real challenges will start. Do you get it? Right. For the first, I'm sure even NPP government for the first 2 years, things were smooth and we were even happy. But after,
everybody thought
exactly, things were in order. Then things began to change after the 2020 election. So basically, as for government, normally when they come for the first year, second year, it's like that in every country. They are new, so they want to prove a point. So for the first 2 years, they will try to do things right. But that's where, as a businessman, as a businesswoman, you don't need to feel like we have arrived. No. Especially when we are seeing a lot of serious active intervention, both at the physical side and then the monetary side. They are all actively now engaging to, I mean, achieve a particular economic outcome. So we need to slow down a bit, watch them, see the things they are doing, the policies they are bringing. And if you realize they are being consistent with it, then we can now have hope that you have arrived.
So, but even that arrival, there's still questions.
There's still questions on it. Exactly.
Okay. Anyway, all right. So let's turn our attention to investments, and I want us to talk about that a bit, and also maybe the sectorial implications.
Okay.
How does this particular intervention influence investment decisions, both local and foreign?
Okay. So I think it's a good question. Now, when it comes to investment issues, you see, especially when it comes to foreign investors, they always want stability. Because, I mean, stability will help them plan and know that at least you can pay back whatever they are going to invest. So at the investment side, one, we will even attract more foreign investors, especially when we have, I mean, we beat all the forecasters, the international forecasters, we beat everybody. So there's that serious confidence in our economy. Just that there's that narrative, the narrative that is more of artificial engineering kind of stuff. But, you know, those who have even invested already, most often when the year comes to an end, they decide where to go, especially when they are not seeing the economy doing well. But now that Ghana economy is doing well, I'm sure these foreign investors will not be in rush to take their money away. Right. Those who have invested in MTN, all the shares. It happened last 2 years. We see a lot of, I mean, people selling their shares to offload their investment. We are not seeing that this year.
Some companies had to leave the country.
Exactly the point. But we are not seeing that this year. They feel like, oh, there's not even no profit of doing that, because when you do that and you exchange to your currency, you get less. Assume you invested at 13 cedis, and now when you exchange is 11, you not be, I mean, encouraged to, I mean, convert your investment into cedis. So you continue to do that investment. Local investors too, I mean, things have stabilized. So and clearly you will see that now government bonds, securities are not really attractive like that. So I mean, those who invested in shares, and they're even moving away from this treasury investment to, I mean, company investments, real investment. And that will engineer growth. Do you get it? Basically, I always say that always as a government, you must make your your treasury investment non-lucrative. Because once it's lucrative for banks to even invest in treasury bills, they will never go and invest in or even give loans, because they know treasury is safe. So once it's predictable, but if we are giving 10%, they want more. So they will chase companies, and that will engineer growth at the rest sector aspect. So it's a good thing that we are all seeing.
Right. So investors are going to come. But the foreign investors, don't they know that what we are doing is artificial?
Yes. So you see, that's why it's always necessary to send a lot of signals.
Okay.
And that's why the finance minister deliberately engaging in the things that he is doing. For example, paying debt early to the energy sector debt. We are seeing them also paying. So all these things send a good signal to invest. And we are not borrowing to pay. That's one good thing. We are not really borrowing like the way every time we borrow money to pay our debt. We are not seeing that.
Yeah.
So in that, it gives them the confidence. Oh, even though we are seeing a lot of artificial intervention, it looks like the country is doing well, because to pay debt early, to pay all these things, bills without borrowing, it's a good sign for a developing country.
Right.
Because I don't think any developing country is doing what we are doing now. So even though the conversation may be about artificial engineered interventions, I'm very sure that they also see more stability, growth. GDP numbers too are good now.
Yeah.
Debt to GDP has now fallen to about 45%. So everything now is, working, especially when it comes to, and they look at those numbers to make their investment decision. They are not here to listen to our political shows.
Yeah.
But once the numbers are good, they are good to go.
Right. So the numbers. So from where you sit, you think that the numbers are supporting the narrative?
Yes. Personally, I believe for now the numbers are supporting the narrative.
Right.
The only thing is that maybe it's deliberate. You are not seeing government serious intervention in terms of the growth aspect, the real economy aspect. But maybe it's possible that they wanted to stabilize things, and then once they are done, they will move to the real economy aspect. You see a lot of construction now going on.
Yeah.
People are complaining the finance ministry is not paying. That's why things are. Maybe it's a whole lot of things they are doing. So now they have started doing those things. So I'm sure growth will pick up very soon.
Yes. Right. Okay. But are there some untapped opportunities in, say, local production and value-added industries? And I want us to help our businesses who are listening to us this morning. So I want to know whether there are some opportunities in those areas that business could actually pursue now.
Yes. So you see, the city has stabilized, which means that machines can now be even imported into the country at a cheaper rate.
Yeah.
And now, if it looks like government will want to invest a lot in the agricultural sector, what it means is that most of our products that we have been complaining that we are not adding value. Even now, gold, we are now the whole government is controlling gold purchase.
Yeah.
So businesses can now decide to go into gold-related value-added, businesses, and then poultry and all. You can do all those things. The government is now willing to support. They brought this in Akoko, so they are ready to support. So once you just need to look at what government really want to do, and most often once you know what government really want to do and you engage in that, you get a support from them.
Yeah.
And that support may come from either Bank of Ghana, Gold Board. You can go for support, and I'm sure they will be willing to support you in such business adventures. So just look at what the government is trying to achieve. Whatever value they want to add now. People are talking about value addition to this, value addition to the cashew.
We've been talking about that for a very long
when
time.
I was in JHS4, we have been value addition.
Yeah.
But I think this is the right time to do so, especially when government now wants to support industries to grow. It's a positive sign to start doing those things.
All right. So exactly 15 minutes to the top of the hour. This is Business Breakfast on Z101.9 FM with me, Nichwebi Hammond. And this morning, my guest is John Kyei, and we're talking about stabilizing the city. What risks and opportunities are there? After the injection of $10 billion by the Bank of Ghana into the forex market. And we've spoken about quite a number of things, talking about investments, talking about whether this is actually a good move or not, and whether it is temporary or it is permanent. We've touched on quite a number of things, but you can still join the conversation if you want to do that. Please feel free to send me a WhatsApp on 0544321019, 0544321019. Let's hear your comments on the conversation. If you want to actually make some comments on some of the points that we've made as well, you are allowed to do so. You can also call us on 03039566641, 03039566641, and then we give you the opportunity to share your thoughts with us this morning. We're streaming live on Facebook at ZFMGH and on YouTube at Z Multimedia. You can drop a comment on any of the live streams and we will read them for you as well. So, John, let's touch on some of the other things in terms of the risks and the vulnerabilities, really. Now, what are the potential risks of relying too heavily on central bank intervention in the forex market, or to support the currency, basically?
Okay. So I think one basic thing we need to understand is that you also have Forest Bureau, and they operate as businesses.
Yeah.
And, as far as they're also businesses operating, remember, they also want to make profit. Do you get it? Now, if we continue to rely on always central bank intervening, in this case, we are seeing them, actively intervening, directing where the exchange rate will be. You see, most often, some of these interventions will also have negative implications, especially when you are also not looking at the home side, the monetary policy side at the home. Now, you see, once you are pumping in dollars into the economy, what happens is that the good thing is that, those who are buying the dollar, they exchange cedis. So also it's like mopping up the cedis from the system.
Okay.
And you see, if you are mopping the cedis from the system, remember here, if you want to do investment, it's cedis.
That's true.
But as far as you are selling these things and people are buying, what it means is that you are reading the cedi in circulation. Okay. Now, once you reduce the cedi in the circulation, it's going to affect, businesses in terms of money available for investment. Do you get? Because at this rate, many companies will even think of, as far as the cedi has come to 10 and present sales is 10, why don't we buy the dollars and keep it? By all means, the rate will change and we can sell for. Instead of them using those monies for investment, they want to take advantage of the low rate to benefit from in case of.
But John, earlier you were actually advising that, or?
Yes.
Advising that they.
Yeah. So you see, that was for planning purpose.
Okay.
So for example, if I know that in 6 months' time I will need this amount of money, and now the exchange rate is 10 cedi 40 pesos, and I know my president has promised that the rate is going to stay the same. When there can be fluctuations also, the best thing to do is to start saving. But I was advising the issue of saving gradually.
Okay.
Towards it. So you can save gradually. Every month you can decide to put some dollars somewhere. So that when the fluctuation starts, you have this to rely on to pay your bills and the rest. So that was a good strategy too.
Okay.
But every strategy also has its negative side.
Of course.
Do you get it? So but some companies may do it more. Instead of them investing the monies they have now, they want to put it in dollar account. Yeah. And then money they need, money they need for investment down, they'll put it in a dollar account. And those things cannot, bring any returns in the short term. Okay. So if you are actively intervening all the time, and it's like the whole market is waiting to see whether you intervene or not intervene, you make the economy more of like a policy-driven economy right, than more of market-driven economy. And if it's a policy or let's say a regulator-driven economy, basically there will be issues. Okay. And once those issues start, there will be serious panic. And that panic can even, water down all the benefits you have achieved over the years, especially when they see signs that now you are not capable of doing so. So don't send that signal that the economy is being driven by the regulator or the policy makers. Yeah. No. Sometimes even there are months that you can decide to allow the market to react and see what happens. But if every time you come and announce, especially when they first announce before the intervention happens, you see those ones, every time they'll be expecting to see whether you come and announce. If you don't announce it, then
they go back to...
You get it. Right. Then they start, and once the panic starts, this man, government couldn't, central bank is not intervening. They feel like maybe the reserves are finished and a whole lot of things are going to, and that can even lead to shock into the economy. So you have to, don't make it persistent. Like every month you need to intervene. And every month you need to announce the intervention. When it happens that way, it's like the whole business community is putting trust in the regulator to intervene. But it can never be an intervention. Central bank intervention can never be forever. There will be an end to it at a particular point in time. So don't give that market assurance that your intervention is what is keeping the economy afloat. You have to allow the dynamics to also work to see whether the market is strong enough to behave under free market economy. Okay. Because you are not doing a command market economy where you are regulating everything, you are fixing everything, and you are directing everything. That is not a good economy to supervise. Right. So they should also allow the market to also have its way. So there shouldn't be every time central bank intervention. No. Okay. I don't think you should rely on it.
How often should they intervene?
You can decide to do maybe...
What signal should they look at to intervene?
I personally feel like don't let the market even know of it. don't let the market, feels like we are always waiting for what the central bank says before we decide on what to do with our business.
Okay.
Do you get? But I think for now, it's like everybody is waiting. Because, you have mentioned you are going to intervene, so they are waiting for the intervention. So it's like every time they are waiting to see whether you intervene. That's not a good economy, right? Because like it's being centrally managed by the regulator. So you can do surprise interventions. You have the numbers, you know what the banks report daily. So if you see the rate is fluctuating too much, you can decide to, show up without even announcing to the public that we are going to. I know the announcement is more of to stop speculations, to make investors and businesses know that you are fully in charge and things have stabilized and there's no need to speculate that the city will depreciate again. So you'll be comfortable doing whatever you are doing. But you see, what it means is that they are always relying on you for such intervention, which is not good in the long run. So you can do surprise intervention. You don't need to announce it. So at the backstage, you are making things work, but not playing the front row. As we are seeing now.
All right. Okay, maybe finally, we have to talk about strategic response. I know you've mentioned some of them scattered here and there for the business community. They are the reason why we're having this particular conversation. So tell me, what should a business or how should businesses adjust their financial forecasting, also their budgeting and risk management in this current climate?
All right. I think it's a very good question. I think so for businesses, what they need to do is that we have the history. They shouldn't forget the history, even though things are moving on well. And they should also speculate that the city is going to depreciate, so they want to take advantage. And therefore, some businesses will decide, once it's 10.4, let me go and buy a lot of dollars and wait, and then when it happens, those things are not necessary. But what I believe we need to do is that, for now, that's why I say you can do gradual savings into a dollar account. Not too much. You can decide that for every month, there's the amount of money you are going to put in your dollar account to build. It's like also like the way central bank has built its reserves. You're also building your reserves to offset any loss that will happen in the future. Then also, personally, I feel we need to also develop, our derivative markets. Things like this. People have the opportunity to enter into, forwards, futures, and the rest. So that they don't need to look for dollars now, where it will lead to, mad rush, and as a result, Cedi will depreciate. The central bank can help build our derivative market so that, people can even speculate that the Cedi will depreciate more in June and make decisions concerning hedging strategies. So they can, have the chance to hedge against maybe 6 months payment they are going to make, 8 months payment they are going to make, 10 months payment. That will help if our derivative market is, developed. That will help, businesses to know that there are some, strategies that they can embark on to reduce their risks in the long run. At this current, moment, we don't have such, markets. We don't have that derivative market to allow businesses to do also. So maybe that aspect we are a bit. So if you look at developed economies, that those markets are even bigger than the normal markets that you hear of. And businesses use that to manage their currency risks a lot. So maybe those are the things that we can do as far as businesses are concerned. Just that, for business in Ghana, we are a bit restricted. Because the options are not too much for us. And it's like always, the government is what we are looking up to. We don't really have much to do in terms of managing our currency risk. Because those options are not available. There are markets that they have forwards, futures, swaps, where you can, even if the exchange risk, you can go and do some swaps, you can do options, a whole lot of opportunities to manage some of these risks. Do you get it? It's like here, you have to do the real exchange, and that is the disadvantage. Maybe they can also go to their bank and try to fix rate with them and see whether those ones too are possible. But I don't think the banks will agree.
To
because this current rate, they are not happy. I mean, yes,
Mm.
because they are also not getting enough from that.
Right. John, thank you very much for your time this morning. I don't know if you have any final words, but yeah, before we go.
Oh, okay. Okay. So my final words to be that, I mean, we have started a new year.
Yeah.
We are seeing stability. We are seeing the government, I mean, doing things right. We are hoping that it will continue. We are hoping that, in fact, interest rates will come down. I mean, that's my major concern. We need to engineer growth. And interest rate is one of the basic elements that drive growth. So maybe the central bank should be active in trying to help in that regard. The policy rate is still high. It needs to come, inflation is now 7%, it's 5%. Interest rate is 11. We need to bring policy rate to about 12%, so that in effect people can now borrow at a single rate. The white people are doing. Some people are even borrowing in Japan. They are borrowing at 0.75. Why wouldn't there be growth?
Right.
Because I borrow at 0.75 in a whole year. And here we are borrowing at 20%, 15%. How do you expect us to compete? So it's necessary to bring the interest rate down to support businesses.
Thank you very much. John Kyei is a financial analyst, and he joined me this morning for a big roundtable discussion. It's been a very good conversation, talking about exactly, stabilizing the city, opportunities and the risks that are there for businesses after the BoG's $10 billion US dollar move. And John has given us a lot of insights as to what exactly businesses should do. And I believe that you've picked a thing or two from this particular conversation. But if you miss any part of it, feel free to visit our social media platforms. It's going to be on our YouTube at Z Multimedia and also on Facebook at ZFMGH. You can actually visit those platforms and play back and actually take note of some of the things. And then it can help you plan better and also predict into the coming months or so. So that's how we wrap up today on the roundtable discussion in Chi. Omeka say yes, sorry. So thank you very much for staying with us right from 6:15 till now. My name is Nitra B. Hammond, and we're back again tomorrow for more interesting conversations. Until then, please take care of yourself. And when you think Ghana, think Z. I'll see you tomorrow. Up next is The Brighter Side with Jeremy Okori Amwaku. Please don't go anywhere.